Hey traders, before we get into the video, we got to take care of the legal stuff here. Feel free to pause the video if you'd like to read the disclaimer. Basically what it says is I am not a financial advisor. Everything contained in this video is for educational purposes only. The information contained in this video is not an invitation or advice to buy, sell, or trade any specific security. You should be aware of all of the risks associated with securities trading and seek advice from an independent financial advisor prior to executing any trades. Now, if you do choose to trade based off of any information in this video, you do so at your own risk. Now, with that out of the way, let's jump into the content. Hey guys, what's up? It's Ace coming to you January 20th, 1:10 p.m. The market just closed 10 minutes ago. And, well, let me ask you guys, did you get fooled today? We obviously opened up this day and it was rallying and everybody thought, wow, you know, this is going to be really good. We're going to head right back up, and instead we got a little bit of a rude awakening that came into the market here in the form of selling pressure that started right around 10 o'clock a.m. Pacific Standard Time, and that was 1 o'clock p.m. Eastern Time. Sorry, I had to do the quick math in my head. Anyways, and you'll see we started off as we were moving up. We're in this demand zone, and if you guys watch my video, please watch my video if you have not watched it from yesterday's market analysis, because some of the stuff I'm going to cover in here, it's going to be kind of a continuation of what I was talking about yesterday. And just to start that off, inside of this demand zone here, I said yesterday that there was a really good chance that we were going to slice through this demand zone because the institutional orders that were in this demand zone have most likely been filled. And you'll see if we go back here, this demand zone was filled once here, it was filled again here, and then we came down into demand. And once again, just to kind of reiterate what I said in the last video, on the 18th, I thought that because we had correlation with the 100-day moving average, we might see a bounce up to the 21 EMA. We did not get that. We sliced through the 100-day to the bottom of the demand zone. And then if you watch that video from yesterday, I was saying that because we're looking at the futures market, which trades 24 hours a day, the candle already started printing below the demand zone. However, though, today we got this rally. We rallied to the top of the demand zone and right beneath the 8 EMA, and then we just literally sold off again, and we snapped this demand zone. So this demand zone is now no good. So in real time, I'm going to just remove this because it has been violated and it is no longer good. There's no more buy orders there, so there's no more support for the market there. And once again, please watch my video because I'll explain how that was really support for the market going all the way back here into December of 2021. So where are we at now? Well, we're coming into the 3 ATR level. And as I said yesterday, price is becoming pretty extended to the downside at 3 ATRs generally. Does that mean we'll bounce at 3 ATRs? No, nothing's a given in the market. It's just an idea of where the bleeding may stop. And so we might see some bleeding stop at 3 ATRs, which is pretty much right around the 44.52 level. And if not, then really where we're looking at getting down to potentially is the 4 ATR level, which is the 43.90 level, which is right now going to correlate directly with the 200-day EMA, okay? And you'll see that that 4 ATR level sits right on top of the 200 EMA. Now, in addition to that, guys, we do have this huge daily demand zone inside of weekly demand. So I believe there is a lot of institutional buy orders that are going to be sitting right in this area. So I think if we did break 4 ATR, and keep in mind at 4 ATR, guys, we're so far away from the mean on the bell curve that literally a snap back to at least the median is generally something that takes place in price action. Once again, nothing's guaranteed, but it's kind of how things work. It makes sense and it's something to look out for. So if we do bounce off the 200-day at the 4 ATR level, I think we could see a float up back into the 21-day EMA. And then if for some reason we do hit that 21 EMA, we get that float up and we continue down and we get into this daily inside of weekly demand, I do feel there are some institutional buy orders here that'll get triggered and we'll move back up. Now, is the sky falling? Once again, I said yesterday, I think this market looks pretty well intact still as far as a bull market. We are down, I didn't measure the percentage. Yesterday we were down 5.62%. We're probably somewhere, and I'm just guesstimating this because I did not measure the percentage for this video. Sorry about that, but I'm saying we're probably somewhere about 7% off all-time highs. Keep in mind, we don't get into a correction until we get sub 10%, which is this white dotted line down here, which is sitting smack dab in the middle of this huge demand zone. So we would have to break this white dotted line and get down here in order for us to be in a correction area or in a correction market, and we're not there yet. So is the sky falling? Well, we are definitely seeing some hard sell-off, and, we did sell off again on volume today also. So, yeah, there's definitely a lot of selling taking place. Once again, I think it's just that, the market's pissed off. They want the free money. They want the monetary easing. I think that has a lot to do with it. I think the supply chain crunch has a lot to do with it. Stagflation has a lot to do with it. Once again, check out my video from yesterday. I go into more detail on that, but that's where we're at right now. Okay. And that's the overall market. Now, if we look at the Qs, the Qs actually were beat up pretty hard, and they have actually entered now into the daily demand zone, sitting within weekly demand, and they're sitting at 3 ATRs. Keep in mind the Nasdaq has already breached its 200 EMA, as you see right here. Price breached this today, and now we're down into this demand area. If there are institutional orders here, they should get triggered, and we should see some type of a float up or a retracement. Keep in mind, nothing goes parabolically up and down, guys. So the retracement would make a lot of sense bouncing out of this this demand zone area. But we did sell off again on volume at the Nasdaq, and the Nasdaq has really led this downward march. It has led it way more than the S&P. And so obviously I've been short side tech names, day trading to the short side on tech, doing very well there, writing credit spread short side on tech, doing very well there. So for me, it's all been intraday and very short term swing trading on credit spreads in the tech and the QQQs. Keep in mind, we are seeing a definitive rise in the VIX. So obviously this is fair on as far as the market goes, and a risk on as well. So, we're looking at right now the short-term 7-day VIX actually being higher than the 30-day VIX. And whenever you have a short-term 7-day VIX higher than a 30-day VIX, you're in a fair market. So once again, I'm not doing anything to the long side. I'm only short side trading, most of it intraday, and then a few real short-term credit spreads just to keep bringing in some income from the market until we can kind of see where the ship's going to go. And hopefully the ship gets righted, because even though you can make money faster when markets fall, I like it when markets rise, because then I can win, and I know everybody else is winning in their 401ks and 403bs and IRAs and SEPs and stuff like that. Okay. Real quick, so the video doesn't get too long, because once again, I'm going to say it again, guys, please watch a video from yesterday. I go into way more detail on kind of like why I think this is all happening. And, but just to take a look at some other markets, I did look at gold yesterday. We had this breakout from a symmetrical triangle in gold. And I said, I thought this was people flocking to the safe havens, because, and moving, possibly rotating some money out of stock assets into gold, to be in the safe haven. And I did say that I think gold's going to have a really hard time getting higher, because we have weekly, supply up here. We have daily supply zones and weekly supply zones. I think there's a lot of institutional sell orders up here. As you can see, price moved up. It barely touched this daily, supply zone, and immediately retraced back down. So once again, I do think we have a lot of, sell orders up here, institutional sell orders. I don't know if gold is going to be able to make it up into here or even past here, which would be a hell of a run if it did. I don't think that's going to happen. I think that if gold gets in here, it's just going to get, those sell orders are going to get triggered, and gold's going to come right back down, or it's going to chop and go sideways. Now, if we do see some kind of, really the bottom falls out of the market, then of course, yeah, absolutely, gold could go up, because at that point it would be a different environment. If we ever got into a bear market environment or a really deep correction, maybe 15, 17, 18%, we might see gold go up. Let's see what else I wanted to chat about real quick. Let's look at oil. Oil's been just ridiculous, and I talked about this in my video yesterday. Please go check it out again. Sorry, I keep saying that, but it was really just a lot of information in that video, guys. So I think you get a lot out of it if you haven't seen it yet. Oil went ahead and moved up into this weekly supply zone, and literally it floated right up and got to the very top, dojied out, and then it looks like it's rolling over. I was really surprised, because I figured if we had institutional sell orders in here, they would have been triggered before it reached the very top. But it looks like there might be some selling up here around the $86 a barrel level, because we are seeing some rollover here. We did get some selling pressure here on this candle today on oil, which to me is a relief, because we're paying way too much for gas. So I want to see this come down a little bit. Would love to see it hit some of these moving averages on the way down, and give us a little bit relief at the pump, to be honest with you. So we'll see where oil's at, but I've definitely got my eye on oil, as the rest of you probably do as well. Bonds, bonds are not doing a whole lot. Bonds did a little bit of moving up today, which makes sense, obviously, as the market goes down. Generally, you can see bonds start to move up a little bit. We did snap this demand level. I haven't done too much charting on bonds really recently, so I do need to take a look at that later tonight. But that's bonds. I want to hop over really here into the VIX real quick. And the VIX is always giving us an idea of where we're at. Now, yesterday, guys, I said I thought this 25 area was very important because we've seen blowouts here. We've seen blowouts here. We did exceed it here in the recent price action, but back here we did see some blowouts at that level. Well, guess what? We exceeded the 25 level, so I'm actually going to remove that from my chart because that's really no longer to me a blowout level. Now, what I'm looking at here is I'm looking at this most recent swing high on the VIX, which is right around 27. And we do have a lot of fear coming into the market, a lot of momentum coming in the market on the VIX. So as long as the VIX keeps climbing, obviously we're going to keep falling, and it's not going to be an opportunity, I think, to buy yet. I will personally, how I like to trade is I like to wait for the VIX to roll over. I like to wait to see fear subside before I start buying names. But guys, what I would do is start putting together your list of stocks that are outperforming the overall markets, okay? Look for that strong relative strength against the against the S&P, against Nasdaq. Look for those really strong names within the best looking sectors and try to get a watch list together so when the market does turn around, the VIX starts to fall and the S&P and the Nasdaq start to rise, you have a list of stocks that you can get in on the long side ride, either, leap option contracts or buying the actual common shares, because in that way you can get in at a good price and get some of that discount that this market's provided due to the downward move. Okay. I think that's it. I'm going to try to call this video here. Oh, hold on. Can't call the video without talking about Bitcoin, right? I mean, come on. We all love crypto. Crypto's a hot mess right now, dude. I'm not touching this, you guys. Not touching crypto at all. We are literally chilling in this demand zone, and there's not a whole lot of conviction I see in buying in this demand zone, which is very interesting considering we fell right into it. And when we had demand back here, especially weekly demand, we saw a quick rise. We saw a lot of buyers, institutional buy orders in here. I'm not seeing any buying confirmation here. So there's a really good chance this could fall through these demand zones and then head back down here to this weekly demand zone here, which would be the next place I would look to hopefully see Bitcoin find support. And also that would correlate with the bottom of this channel that it's kind of been in here. So right now, to me, Bitcoin's really choppy and I don't really see it. I don't see the bullish sentiment in Bitcoin. So if I'm just kind of hanging out and waiting for the crypto market and for Bitcoin to kind of show me some interest to the upside. And until then, it's just kind of a wait and see. Okay, guys, I hope you enjoyed this quick video. Thank you so much for watching. And real quick before I go there, the dollar's rising. Real quick, guys, for those of you who don't know, whenever the dollar rises, the market generally falls, and vice versa. When the market falls, the dollar rises. And you're seeing here a very strong dollar, which is never really good for the overall market. So as long as the dollar is rising as well and we have a stronger dollar, we'll probably see some more downward moves in the market. So I just wanted to throw that in there at the very end. But once again, I did want to thank you guys for watching the video. I hope you guys are getting, a lot out of this. I just started doing these market commentary videos because I was asked why I don't ever talk about the overall markets or share my ideas or my views on it. So this is kind of a new series for me. If you did like it, please give the video a thumbs up so it gets out to as many people as possible. Also, leave me some comments down below. Let me know your thoughts on the market. Let me know what you think of the videos. If you like this content, I'll keep making it. If you don't, that's okay. I'll bring you something else that you guys like that will help you in your trading journey. And please, guys, subscribe to my channel so you will know when I have new content coming out. Make sure to click that bell icon so that way it notifies you when I post a new video. And you guys take care, stay green, trade well, and we'll talk soon.